So what I like to do is review the weekly candles and just mark out what I'm expecting for the following week. So as I can see here, I've marked out external range liquidity and I've marked out internal range liquidity down here. Now, why is this internal range liquidity? Because overall we are in a bullish market and this is the swing low. So we have an old swing low here, and if we were to run lower, this is still running into internal range liquidity. And as you guys can see here, we have a fair value gap that has been created on the weekly time frame. Now, all I'm trying to do is make a prediction of where this market is going to go next. Are we going to set up and trade to more external range liquidity, or is this market going to want to roll over and trade to internal range liquidity? I typically don't like to make bets that the market's going to trade to internal range liquidity, especially when the markets are trending one specific way, because when the markets are on a strong trend, we do not tend to take out internal range liquidity. What it tends to do is just create higher lows and higher highs on each specific week as we go higher. Okay, so again, step number one is review weekly candles for bias. Now, I will do that at the end of the week or at the beginning of the week. So maybe Sunday evening, I'm reviewing the weekly candle to try and determine where I'm going to trade to that following week. Number two, review the calendar. You want to make sure that you're in sync with what's going on the calendar. A lot of times I use the calendar kind of as like my treasure map, because when I have specific events lining up throughout the week, I know exactly which days are going to be slow and choppy, and I know which days are going to be a little bit more active. So one thing that I've learned over the years is learning how to navigate throughout the markets week to week based on the economic calendar.